morning and welcome everyone to this week's edition of the Energy Action Market Wrap. My name's John Huggart, the CEO here at Energy Action. Now we've been bringing these weekly energy market wraps to you over the past, over 6 months now. And every week we bring you updates on what's going on with prices, demand, news in the market as well. Today I've got really terrific news for businesses on three fronts. It's a trifecta. So we can report today lower contract prices for electricity, for your contract prices, lower gas prices, and lower prices for small businesses is now the determination looking forward into the market. So let's start with the electricity contract prices. So in the NEM, average electricity spot prices have fallen to their lowest levels since 2016, recorded recently at $66 per megawatt hour. Now that's the result of its lower demand, lower gas prices, and obviously lower bid prices from those dispatchable generators who need to meet that shortfall when renewables are not running. The NEM's average demand has fallen 4% in the last quarter, so not too impacted by coronavirus in the whole quarter. It was mainly driven by lower cooling requirements due to the seasonal difference over last year. Obviously it was more apparently in that last couple of weeks of March, and really the outlook was what really sparked that steep reduction in the prices, which had already been trending down, but it really consolidated those lower prices that we've seen in the market currently. Contract prices for 2021 remain down, consolidated what we're seeing now in New South Wales, Victoria and South Australia. We see potentially the opportunity to move a little bit further down in Queensland, and a similar story for 2022 as well. We do expect those prices to potentially come back a little bit in the upcoming future, primarily driven by the return to work as the lockdown starts to ease across Australia. But also we're seeing the prices really set now heading towards that long run marginal cost for generation. And if that was to persist at these lower levels for some time, we'd start to see the withdrawal of capacity. So keeping that market balance is really, really important. We don't want to go through those shocks that were experienced back in 2016 and 17 with the withdrawal of capacity. And in West Australia, the West Australian energy market has been relatively stable. Their demand has been up a little bit, really hot weather over there. I know, speaking to the team the other day. And we'll still, having said that, we'll still see prices still easing over the future outlook, mainly driven by the tsunami of supply and solar coming into the market with those renewable energy generation. So let's talk about the gas market now. East Coast gas market prices reached their lowest level in the last 4 years as well. Now the prices last week averaging $5.63, I should say, in the last quarter, almost 42% down from the same period last year. Now that reduction was due to more gas being offered into the market, lower international prices clearly as well, and finally increased gas production from onshore gas producers. Around 50% of the bids were under $8 a gigajoule, as opposed to the previous year. At the same time, only 1% of bids were lower than $8. So we can see a real shift there in the long-term pricing of gas. Good news for our business customers. Interestingly, total East Coast demand for Q1 increased compared to the last year, according to EMO. That was predominantly due to the higher LNG exports from Curtis Island. Now let's have a look at the certificates market. LGC prices currently trading at $32.40 per certificate. According to EMO, the significant price movements during Q1 was partly due to strategies taken by the retailers prior to February of their surrender period. Victorian, or the VEECs, been trading stable around the $8.34. Although we do expect further increases in VEEC prices. Energy savings certificates currently stable as well at around $27.50. And I remember the last piece of our good news for business customers is on small market offers. And this is subject now to the default market offer, and the Australian Energy Regulator have now published their determination for the 2021 period. And what that's seen is reductions in all areas across New South Wales, southeast to Queensland and South Australia as well, where prices for residential as well as small business have decreased in all distribution regions. And that's really following the drop in the wholesale electricity prices that we've been following in the contract market as well. And finally, in the news this week, the Snowy 2.0 making it towards the top of the list for the New South Wales government, funding a $4.6 billion project to help kickstart the economy and meet the energy market requirements going forward. And this is coupled across Australia with state governments really dusting off plans to see what initiatives they can take that can help stimulate economic activity as part of our rebound from the coronavirus, whilst meeting our requirements for a stable, secure and low-cost energy future. Thanks so much for checking in. This week's market wrap, as I say, a trifecta of good news for business. It can be better for your business when you speak to one of our energy experts around Australia. Just give us a call. Thanks very much for your attention.